When you apply for a home loan, you'll receive important information that details the costs associated with getting a mortgage. One of the items that you're going to receive when you first apply is called a loan estimate. Your lender will send you the loan estimate. Most lenders will send the loan estimate electronically, which means you'll need an email address for them to communicate with you. Hello everybody, my name is Ryan Wheeler from United Residential Mortgage, and in this video I'm going to talk about what you need to know about the details of the loan estimate. A loan estimate tells you important details about the mortgage loan that you've requested. A loan estimate is a standard document that you'll receive when you apply for a mortgage with any lender. A loan estimate, or LE, always follows the same format, which makes it simple to read and understand. It includes 3 pages, and lenders are required to send you a loan estimate within 3 days of applying for a mortgage. What is included in the loan estimate? A loan estimate is 3 pages long, and it's split into sections which outlines the term, closing costs, fees associated with your loan, including third-party costs. Some of the items you'll find listed on the loan estimate are going to include a summary of your loan details, which includes your loan amount, the term of your loan, your initial monthly payment, your escrow account information, which includes your prorated annual tax and homeowner's insurance costs. Your estimate also includes closing costs, including your lender fees, title fees, third-party costs. While it's important to understand that all terms on your loan estimate, there are a few key sections you'll want to pay special attention to. Loan estimate page 1. Page 1 of the loan estimate is an overview of your loan terms and your cost. You'll want to pay special attention to the date issued. The LE is only binding to the lender for 10 days after this date. The loan term and the type of loan, make sure that these terms you wanted and that all the LEs you compare show the same information. Interest rate, look for the rate, but also pay attention to page 2, which shows you how much you have to pay in the form of points to get that rate. Estimated total monthly payment, which shows you how much you pay each month with principal, interest, taxes, and insurance included. Estimated cash to close. This number shows how much you're actually going to need at closing, including your down payment as well as lender fees and other third-party charges. Now let's look at page 2 of the loan estimate. Loan estimate page 2, the second page of your loan estimate, breaks down the cost and itemizes it, which is shown on the first page. So better understand your interest rate and the fees that you should look at. So number 1, points. This shows the dollar amount you have to pay to buy down your interest rate and actually receive the rate shown on page 1. Application and underwriting fee, all charges, all lender fees charged to process your loan. Services you can shop for. These are third-party services not set by your lender, but you're free to shop for those third-party providers. Calculating the cash to close. This box shows you a breakdown of the estimated cash to close that you're going to need on page 1. And then finally, let's look at page 3 of the loan estimate. The loan estimate on page 3 of the loan estimate has a few more key numbers, such as in 5 years, it shows how much you'll have paid altogether and how much you'll have paid toward the loan balance alone in 5 years. APR. The APR represents the total loan cost over the life of the loan, including the interest, upfront cost, expressed as an annual percentage rate. Does the loan estimate mean you're approved? Receiving a loan estimate does not mean that you're approved for a mortgage. The loan estimate just shows what the terms the lender expects to offer you if you decide to move forward. So remember that the loan estimate is issued based on the initial look at your application. You can get an LE after providing your name, your income, the property address of the home that you want to purchase or refinance, the property's estimated value or purchase price, your loan amount, and your social security number. So at the time that a lender sends the loan estimate, they haven't yet seen all of the documentation supporting those numbers on your application. In other words, your loan hasn't gone through full underwriting yet. So if anything on your application can't be fully documented, like your income, your savings, debt, etc., your loan terms are subject to change. So the terms on your loan estimate are also subject to change if there's a major change to your loan. For instance, if you change the term from a 30-year to a 15-year, or you decide you want an adjustable rate versus a fixed rate. So only after the lender has fully reviewed all of your documents will you be officially approved for the loan. How accurate is the loan estimate? Well, although it's just an estimate, the loan estimate is very often a reasonable approximation of what your loan will cost. How to get a loan estimate? If you don't have a home picked out yet, a mortgage lender is likely to give you a quote on possible cost. Sometimes they call it a fee worksheet to accompany that. If you do have a home picked out, you can complete a mortgage application and get an official loan estimate within 3 days. Remember to work with your lender to find out the best program, payment, and options for you and your needs. Thanks for watching, and if there is anything we can help you understand with your loan estimate, please don't hesitate to reach out to me. My name is Ryan Wheeler, and you can connect with me at 270-228-0075, call or text, or visit us at unitedresidential.net, or schedule a call with me at schedulewithryan.com. Thanks a lot.